Many thanks for joining us once again on the program. I am Folashade Ogrinde. The Finance Act of 2021, which was signed into law by President Muhammadu Buhari, is set to transform the administration of tax in Nigeria, but primarily to increase government revenue through taxation. The Finance Act, which took effect from January 1st, 2022, stipulates more education tax, turnover revenue from foreign e-commerce companies, and introduction of excise duty on carbonated drinks, among others. But joining me to discuss the major changes made to the Finance Act as well as the impact on businesses, I'm joined by Babatunde Olaniyi, a Senior Manager, Corporate Tax Consulting at PricewaterhouseCoopers. Thank you very much for joining us on the program. Now, let's begin by asking, could you give us a general overview of some of the major changes made in the Finance Act of 2021?
Thank you very much for that question. All right, so the Finance Act 2021 is a law that was enacted on 31st December 2021, right? And the effective date of the Act is 1st of January 2022, right? The Act seeks to amend 13 different laws, right? And it has 42 different sections, right? If you look at the major changes that came through the Finance Act 2021, the introduction of capital gains tax on the sale of capital shares, right, is at the forefront of the major changes, right? So the Act is to introduce capital gains tax at 10% on any capital gain derived from the capital sale of shares in Nigeria, right, subject to certain thresholds, right? And definitely some of those thresholds include where the valuation of the shares is less than 100 million, right? Or where a situation whereby the seller, right, divests, right, and reinvest those proceeds into another Nigerian company or the same Nigerian company within a 12-month period. Now, looking at some of the changes in the Companies Income Tax Act, right, the Finance Act 2020 had an error around the application of minimum tax. Part of the palliative tax measures that came through the Finance Act 2020 was a reduction of minimum tax by 50% from 0.5% to 0.25%. But through the final touching up of that particular section, an error was made, which kind of made it very difficult for taxpayers who had filed their returns prior to the effective date of the Finance Act, because it led to a retrospective application. Right, so the Finance Act 2021 has brought in a particular section that amends the minimum tax provision and allows taxpayers to take that minimum tax reduction in rates for a 2-year period, right, at the taxpayer's choosing. So it could either be 2019 and 2020 or 2020 or 2021, and that's a welcome development. In terms of other changes, there will now be changes around how you can claim tax deductions for capital assets, right? One of the introductions in the previous Finance Act was the fact that if you generate operating expenses that generates non-taxable profit, you can get a deduction for it. But that limitation was not extended to deductions for capital assets, right? So the Finance Act 2021 now brings in the provision that seeks to synchronize those intentions, right? So you have a situation now that if you have capital assets that generate non-taxable income and that qualifies as a significant part of your revenue, in this case above 20%, right, you have a situation whereby you would have to prorate. So that brings out a restriction on the capital allowance that you can claim going forward on capital assets used to generate non-taxable income. Now, how this affects small companies, similar to the previous provision, right? The Finance Act 2021 allows that those small companies would compute the capital allowance for those assets, right? And for the fact that they're exempt from income tax, right, they would have to compute it and consume it, right? So you have a situation whereby if you have a small company that migrates to a medium company over some years, you have a situation whereby those capital allowances would have been lost within the period where the company was small, right? Another major change from a value-added tax standpoint is that in the previous version of the VAT Act, there was a gap around accounting for VAT on business to customer transactions, say if subscriptions for Netflix, for example, right? But one of the things that the Finance Act 2021 has done now is to plug that gap, right, and kind of put a compliance requirement, right, on the supplier of the service, right? In this case, particularly when it comes to foreign digital service companies providing services to Nigeria individual customers, right?
Now, indeed, Mr. Babatunde, we'll definitely get into the nitty-gritty of all of that. But before we get to that, I'd like you to speak on the significance of the Finance Act to Nigeria's drive for revenue.
Yeah, so I would say that it's very significant, right? If you look at our budget deficit for 2022, it's over 6 trillion naira. If you look at our revenue performance over the past few years, we've never attained our projected revenue, right? So one would say that if you look at that vis-a-vis the major changes that have been made, which are geared towards increasing the tax revenue for government, you would say that definitely the Finance Act 2021 will definitely lead to the achievement of that particular objective, which is one of those objectives, right? The two other objectives of the Finance Act 2021 is to stimulate investment and promote economic growth. Now, on the stimulating investment standpoint, you find a situation whereby, because Nigeria has done this now over the past 3 years consecutively, it there's some form of fiscal certainty, right, within our fiscal space. So the investment community, right, can definitely plan around the changes that are going to come through with the Finance Act that comes vis-a-vis the budget. Now, given that this is the last full-term budget for this administration, definitely one would say that this Finance Act is going to be very significant to that revenue generation drive.
The excise duty on carbonated drinks and other non-alcoholic beverages. How much of an impact really do you think this will have on affected companies?
Yeah, definitely this would have an impact, right? Definitely you're seeing people come out to call for the halt of the implementation of this particular provision of the law, right? The Manufacturing Association of Nigeria actually came out to say that that implementation should be put on hold, right? And if you look at how the excise duty would apply, which is basically 10 naira per liter, this would definitely increase the production cost for the manufacturers, right? Definitely the companies will also look for situations whereby they can pass on those costs to the final consumers, right? And definitely if you look at it with the inflationary pressures that we're having in the country, that would definitely have some positive correlation, right, with that in mind.
Now, certainly, another highlight in the Finance Act is a turnover tax on foreign digital companies. Do you see this having any impact on the purchasing pattern of Nigerians when it comes to making purchases on some of these online platforms?
Definitely, it would. Nigeria last year made that significant move in terms of not signing on to the Global Tax Reform Pillar 1, Pillar 2 initiative of the OECD, right, alongside Kenya, Sri Lanka, and Pakistan, right? And you see that with this particular change in the Finance Act 2021, the Nigerian government has reaffirmed that position in terms of giving more clarity as to the portion of the profits of these foreign companies that would then be subject to the Nigerian tax net. Now, if you look at the cost profile of companies all over the world, given the pandemic and the supply shocks that we had coming into late last year, definitely the cost profile of these companies are definitely building up, right? And every company would definitely be looking at opportunities to maximize returns for its shareholders, right? And you definitely find a situation whereby that will lead to situations whereby they will pass on those costs into the prices to the Nigerian customers. So definitely that would also definitely lead to an increase in price in the short to medium term.
Now, many experts have actually lent their voice with regards to the issue of excise duty on carbonated drinks. And just taking you back to the earlier point you made, beyond, this new tax law actually affecting the producers of these drinks, how much of an impact will this have on Nigerians who, for the majority, actually, purchase these drinks? Do you not think this would actually erode to an extent the purchasing power of Nigerians with regards to this sector?
So definitely, I would say that definitely that would be an issue, all right? Because if you look at the objective behind this introduction of the excise duty, right, you find that government definitely needs revenue, right, to provide its public services to Nigerians, right? Definitely, if you look at the introduction of this excise duty, that will be passed on to the Nigerian consumers, and you find that if one would say that would erode the purchasing power of Nigerians, right? The flip side to that is definitely now government is generating more tax revenue, and hopefully Nigerian taxpayers can hold government to account, right, in terms of how those money are spent and transparency in reporting how those money was spent to Nigerians.
Well, indeed, we've reached the first half mark of this discussion, Mr. Olaniye, and it's time we take a breather. Well, they stay with us. Money Matters returns shortly.
Cut. All right. What's your name again? Kemi?
Yes, sir.
Good. Are you ready for us for next week?
Yes, sir.
Next.
No, sir. No.
What? Look, what we need here is one who can speak fluent English. Give her a chance.
I need a angel to hold me. Hold me, my beautiful angel.
Cut! It is Angel, not Angel. Please, I'm done with you. Excuse us. Kemi was far better.
It's not about our rendition. It's not about our performance here. By the time she and her friends join us in our hotel rooms, you will know how far.
Can I have her phone?
She has a robust profile.
Real robust profile. I do not undercut professional ethics. It is an act of corruption. Not in my country.
Corruption not in my country. Stop corruption now.
Welcome back. Well, if you're just joining us, I've been discussing some of the details of the Finance Act of 2021, and Babatunde Olaniye, Senior Manager, Corporate Tax Consulting at PricewaterhouseCoopers, has been my guest. Well, thank you very much for standing by. Let's now move the discussion a notch higher. The issue of multiple taxation is very worrying for many taxpayers, especially businesses. How well do you think the Finance Act addressed this issue?
Look at the revenue drive, which is a major objective of the Finance Act 2021. One would say that if linking that with the major changes in terms of the increase in taxes, so for example, the tertiary education tax that has now gone on 25% from 2% to 2.5%, and you also have the excise duty levy that we just spoke about quite recently, and also the NASENI levy, which is the National Agency for Science and Engineering Infrastructure Act, that introduces a 0.25% on the profit before tax of companies in the telecommunications, banking, oil and gas, that generates revenues at 100 million and above, right? If you look at that, one can say that one unintended consequence of the Finance Act is the fact that companies within the tax space now would face multiple taxation, and this is something that is well established in terms of multiple taxation, right? And it has been an outcry for taxpayers across different industries, right? But on the flip side of it, right, you also have situations whereby you have multiple agencies auditing the same taxpayers. One of the good things that the Finance Act tries to to do in this case is to make the FIRS to be the focal point for assessing, administering, and accounting for revenues that accrue to the Federation account and the federal government, while still providing a framework where the FIRS can collaborate with all the other government agencies to ensure that government does not lose money, right? And in the event that other agencies, as a result of carrying out their various functions, right, identify areas whereby there are tax inefficiencies or tax gaps, right, they could raise these matters to the FIRS, and they will take that forward.
So another interesting point in the Finance Act is the authorization of the FIRS to access the computers or devices of companies. While this is not new, of course, do you think the socio-economic climate of this country, Nigeria, will promote this?
Yeah, so definitely one of the issues that we have as a country is revenue, right? Nigeria is not generating as much tax as it should, right? Looking at our tax to GDP ratio of 6%, which is very poor compared to our peers in the African countries, right? You find that the only way Nigeria can generate sustainable revenue is through taxation, right? We've looked at how the Finance Act 2021 seeks to address this in terms of expanding the base to capture transactions that are previously outside the tax net, such as the sale of shares, capital sale of shares, and also VAT on B2C transactions, and the likes, right? Then the other side of it is to expand the tax net to include taxpayers that are outside the tax net, right? So you don't find a situation that we have right now in the country whereby the same taxpayers are paying taxes multiple times, introduction of the same taxpayers. And one of the big ways in which the FIRS can achieve this objective is through technology, right? Data-driven actions, right? And one way the FIRS can achieve this is through getting access to intelligence, information gathering. Now, the Finance Act 2020 gave the FIRS the powers to plug in proprietary applications into taxpayers' solutions, right? And there's definitely some gaps in terms of practice. So we find a situation whereby the Finance Act 2021 has provided a situation whereby the FIRS can then plug in third-party applications as well, right? Definitely at the end of that is the FIS will definitely have access to more data, to more transactions, find a way to analyze those data through data analytics to kind of try to bring more taxpayers into the tax net. And on the flip side of it, one can then say what happens to data security, right? The Finance Act 2021 has kind of put that at the forefront as well to ensure that all FIS officials that get access to sensitive information of taxpayers keep that highly confidential and keeps it in secret.
Small and medium-scale businesses in Nigeria, one of the very big challenges they usually have is access to information, basically education with regards to taxation and any other information they need. So could you please give an expose on some of the basic issues in the Finance Act of 2021 an average small and business scale owner must know?
Yeah, so I think one of the key insights from the Finance Act 2021 that affects small companies is the fact that the Finance Act 2019 kind of introduced certain tax incentives for small companies in terms of exemption from income tax, exemption from VAT, and also exemption from complying in terms of filing returns, VAT returns, right? The Finance Act 2021 has kind of left that untouched. So, as a result of the Finance Act process, right, all laws are reviewed. So I would say that definitely government reviewed these incentives that accrue to small businesses, right, and basically has decided that those incentives need to stay, right, to achieve its overriding objective that we spoke to earlier. Now, as it relates to some specific introductions as it relates to the Finance Act, right, one of the things I said earlier in the conversation was that in terms of capital asset acquired by small businesses, the Finance Act kind of ensures that those companies must compute capital allowance during that period when they are small or based on their financial statement, right? And they will lose it, right? So you find a situation whereby small companies can't get a deduction for capital assets, right? And there might be some, should I say, planning around that, but that's definitely something we'll look into subsequently.
Well, indeed, Mr. Babatunde Olaniyi, Senior Manager, Corporate Tax Consulting at PricewaterhouseCoopers, thank you very much for your contribution on the program.
Thank you very much for having me, Folashade.
And that's all we have for now. Join us again next time. I am Folashade Ogurinde. Bye for now.